And we are live. Welcome everyone to our weekly show where we talk about topics that interest you in the market. And today we are talking about a very interesting thing. Basically, it's a data released by SEBI, which talks about how FNO traders have fared over 2019 and 2022. So that's pre-COVID and post-COVID. This is a comprehensive PDF report which SEBI has shared. You could refer it on their website. I'm just pinging a link in the chat box if you are interested in the detailed report. Now, frankly, looking at the report, it does not feel nice. And when we look at the numbers going ahead, when you read this report, you have a little tingling in your stomach saying that this is pretty bad. The numbers paint a picture which nobody would like to see. So firstly that, and welcome Deepak to the weekly show, and we have you here discussing this topic. Before we move on, I'll just like to you know uh, take this disclaimer out of the way. Again, as we always say, nothing is for nothing is a trading or investing advice. This is all for information, uh, and you should do your own research. And in this session, we'll see why you should, and you should also consult a proper advisor while making investment decisions. Basically, as Deepak says a lot, that you are responsible for your investments. You can take information from all the sources you want, but when you make investments, you should take the responsibility for that. Now, moving forward, this is something which everybody has been warning us, and I have this slide here, and this slide would put a context on what we are saying. Nitin Kamath, CEO of the biggest broker in India right now, he has said this categorically many times in many shapes and forms that active trading is a difficult job. And there is a line that he has always said that it is the toughest way to make easy money. And in June last year, he had tweeted about it that a very small percentage of active traders would make money. And over 3 years, he's saying just 1% of them are beating FD. Uh, of course, he could not, or they could not publish data because it's because of privacy reasons and everything. But now SEBI has given data which actually shows something like this. And ace investor and trader and late Rakesh Junjunwana, he used to say this, and uh, we used to laugh at it, and we used to have used to say this: खरीदने वाले की जेब खाली और बेचने वाले की तिजोरी खाली. And people who understood this. People who didn't understood this thought this was a very rhetoric way of saying stuff. And this report is actually making this thing come true, that जेब भी खाली है और तिजोरी भी खाली है. And on that note, I'll bring in Deepak Shinoy and we'll take this session forward. Deepak, you're on mute. Deepak, you're on mute.
Huh. So
Okay,
what Rakesh Junwala said was with respect to options.
right.
Whatever the buy who buys options, he empties his pockets, and the guys who sell options, they empty their treasury in a way, because once in a while you will see stock market give you like terrible returns on even when you're selling options. So both parties lose. But yeah, I mean, this has been like a very dramatic, note in general. What SEBI has never done is focus on profitability of individuals. See, companies can make money. A bunch of others, individuals who are in the stock market trading just stocks, buying and selling stocks, they could make money. The futures and options traders have been the biggest kind of contributors to volumes in the market. Now, if you look at them, and it turns out that most people don't make profits, as we can see. I think, yeah, honestly, it almost calls to question kya kar raha ho? But this is like saying most people don't get into IIT. There are 10 lakh people who write IIT exam, 2,000, 3,000 people get in. So why do you bother writing IIT? Everybody thinks they're a genius. If everybody did not think, everybody thought on average that nobody will make it to IIT, then nobody would write the IIT exam. And if nobody writes the IIT exam, then nobody will get in. So it will be proved right also कि यार किसी ने नहीं लिखा, किसी को भी नहीं मिला. So you're in a situation where should you trade F&O is being answered by, but most traders lose money. Of course, yeah, most everybody in any profession loses. Okay, so it's just more something that's as broad as as a F&O market. We'll obviously see most people lose money. We've got gambling feeling, and we'll talk about each of those things. But I think don't get disheartened by this fact that just because a lot of people lose money doesn't mean you're the same person. And there are behavioral traits you can fix in yourself that will just tip the edge over in your favor, simply because there are so many people unwilling to make those changes to themselves, that all you have to do is make a little bit of change, and we'll see how much difference that change makes on average, for a winner versus a loser in the markets. I know you have a bunch of data, Nihit. आप ले जाओ.
Yep. And talking about data, the thing that really impacted me personally was we all knew, and I've been hearing you saying this, and Nitin also, and everybody, that it's very, very difficult to make money in options trading. And then we used to wonder, कि अच्छा ठीक है, difficult for others, we could make it. But now when we put the numbers out, you realize that the if you leave out the top 5%, there's absolutely nobody making money. And to think that you will be into the first 5% every time, and that's putting a number to it makes it drastically different. So let's dive in with the data and this conversation. The best part about this report is it has a lot of data, so you could always talk the data. So Deepak, the first point, and this is the one thing that stands out, and the biggest takeaway is that only 6% of active traders made money in financial year 2022.
Amazing.
Just
Yeah.
6. And active traders definition is if you have taken more than 5 trades, you are an active trader. And this data is of the top 10 brokers. So the top 10 brokers would have, I think, almost all the trading volume. So only 6% made money. And how do you process this?
I
It's
know,
it's the big
amazing.
sharks.
In
The
fact,
big
look at the
sharks.
rest of the data here, and
Yeah.
you're looking at average losses. Also, average. If you include the winners and the losers together, you're talking 56,000 rupees per user is a loss. जो आदमी मतलब earlier it used to be like that means a lot of people lose 50,000 rupees odd, and some people lose a lot more, some people lose a lot less, and the median P&L is still 21,000. That means there are some people who lose a tremendous amount of money. Median being much lower than the average is just mathematically means there are more people who have lost a lot of money, uh, and the median person has lost only 21,000 rupees. And at the 25th percentile, that means you order everything and then you take the first three fourth in terms of amount of losses ascending order, in the sense of the lower the at the lowest end you will have above 67,000, the 25% of people. That means 69,000 or 70,000 rupees is pretty much your, your people who started losing really, really large amounts of money. The average profit here, you're looking at smaller numbers. They're making 3,365. That must be because some people make really small amounts of profit. A lot of people probably make really small amounts of profit, but the profit made in a longer term by some individuals must be really, really high. But losses are also pretty high. We're talking 60,000 rupees on an average, people who made loss. So if I segregate the group into X number of people made losses, they were 94%, right? And 6% made profits. And then, I mean, this is just amazing because it just tells you how tough a discipline this is.
Right. And one thing I'm not able to wrap my head around is how is average PNL lower, or how are people making matlab, how nahi, why are people making lower loss? Is it because of reduced lot size of index options and futures over this time, or is it something else? Well, we could only guess. We'll never know. But what
Yeah,
could
I
it be?
mean, honestly, I think first lesser people. You're talking on the left side in FY19, only 7 lakh people, right? 7 lakh people were trading in FY19. Now there are
Right.
45 lakh people trading in FY22. So it's possible that the more people that have come in now, they come in with a lower amount of money to lose. So the minute I've lost 50,000, I've lost all my capital, I'm out. I don't have the 81,000. So it's possible that the new people that have come in actually have lost a lot of their capital, but they just had lesser capital to begin with. And everybody came in saying 50,000 रुपए लगाएंगे उसका 5 लाख बनाएंगे and zero बन गया तो निकल गए.
Right. So yeah, probably this is the base effect where your denominator is far higher, and they were usually undercapitalized. So the big thing we have established, only 6% of the traders or people who trade in FNO are making money. Now we drill down and we see what are their profiles, what is the age group, and we see how they did pre-COVID and post-COVID. So fascinating data here where we are seeing that in FY19, between age group of 20 to 30, which you find most active on social media, they contributed 11% of of total traders. Now it is up to 33%. So that means all the accounts that opened during this time, we went for what, 4 crore, 3 crore demat accounts to 10 crore demat accounts roughly in this period, and everything has come from youngsters who have been added to the stock markets, and that's a huge increase. And then maybe
And
we'll
that
see
makes sense.
how.
Also, no? They only have 50,000 rupees to lose. They must be the people with relatively lower incomes in comparison with everybody else.
Right.
But it's
And
amazing, 20%.
yep, so then the pie, I guess, is now 36 and 39, so 75% is in the age of 40. So earlier it was what, only 54. So that's again a base effect where every youngster has joined through, maybe through discount brokers, through online account opening, other verification, all that has helped. Now looking at the chart on the right hand side, we see that across age groups we have lost money, and everybody is losing money across the board, no matter what your age. And folks, when we look at this data, there are always two types of tables here: all individual traders and active trimmed distribution. So when you see the word trimmed, that means that this data is not taking into consideration the top 5 percentile and the bottom 5 percentile of the traders, which means generally the middle 90%, which makes the aam admi or the average trader. Trim data is for that average trader. So probably we should look at the trimmed data and see that what bulk of people are going through. Because as we already established, when only 6% people make money, the top 5% is making all the money. So your bulk is anyway losing. So it's all statistical thing. So in this, Deepak, across age group, you are losing money. And as the age group increases, the amount of losses that you see are also increasing, probably due to higher participation power.
Also, if you look at the trim distribution, it seems like you see the last two columns. At less than 20 years of age, your average loss is only 29,000. Average profit is only 2,800. This is trimming for the
Right.
outliers. And then at 50 or 60, you're looking at 80,000 average losses and only 3,800 average profits, right? And uh, the average P&L in general is a little bit higher. It's almost like you're older, you have more to lose, and therefore you tend to lose more. But then again, these numbers are also skewed by the fact that they're only about 5 or 3% of the population that is above 50.
Right.
I'm I'm kind of happy about this because I was hoping to see that as you grow older, you'll make more money and you lose less money. The answer is no. You make more on average if you profit, but not so much more. A little bit more. What was 2,800 at age 20 is sitting at 3,800 at age 20, age 55, 50 plus. So the difference in average profits is not much. And the average loss goes from 29,000 to 81,000, so roughly three times. So it's like the older you get, you're prepared to lose more, but you're not prepared to, you're not making any lot more, even if if you're profitable. So very crazy. But yeah, I mean, honestly, if you look at even some of these numbers, um, it appears in a trim distribution in FY19 that profits also came down, losses would go up. So average losses profits were 9,000 rupees for 60 plus, or even close to 9,000 rupees even for 40 plus. But now they've come down to 3,000 rupees. That means there are a lot more people playing, a lot more people, means a lot more people are losing as well. We've seen this. And they have dragged down average profitability even of people who have only won what they were supposed to. So, very interesting. What's also interesting is the trimmed ke upar wala, which is all individual, shows you that the top 5% probably take everything. The top
True.
5% takes everything of the profits, but possibly a bulk of the losses as well. So it's like a very fat tail. It's not very well distributed. So the top 5% probably have a disproportionately large amount of the profit pool, because the average profits for the where which is only 4,000 rupees for a trimmed distribution is as much as 3 lakh rupees for an untrimmed distribution, which means the top 5% probably take out a significant amount of profit.
Right. And moving on, so we have established how many people are making money. So that's 6%. We have established in what age group are they. So across age group, the statistical disadvantage of trading options and futures and the psychological uh, mismanagement gets to you no matter what age you are in. So next we will see what are we trading, what are the most active traders trading. And one statistic that stands out here is that post covid the whole game has shifted to indexed options. 61% of the trading volume is in index options, 30% is in stock options, so 91% is in options, uh, while futures is only 5 to 9%, sorry, only 9%. So Deepak, that's a drastic change. Suddenly everybody has realized that options is the way to go.
Yeah, that's also because the NSE has introduced all these weekly options. Abhi daily option bhi karega, if you ask them. Every day it expires. Morning it starts, evening it expires. All this, earlier it used to be 1 month, 2 month, 3 month. Then they introduced 6 month, 9 month, 12 month also. Not much action there. Though they moved down. So they said every week. Every week there is an option. Now there's an option on Thursday. There's another option that expires on Tuesday. So you want adrenaline rush, you get two adrenaline rushes. Okay, for Thursday and Tuesday. And then you have stock option expiry, which is only once a month. Index option expiry is once a week. Bank Nifty and Nifty expire on Thursdays. Fin Nifty expires on Tuesdays. Some BSC USD INR options expire on Friday. If you are jobless, I mean, this is not your job, but your job itself does not give you much to do. You're sitting there saying, boss, karo, every day there is new drama. And, this is like this is like entertainment also at some point, and we'll come to why that is a problem later. But this is also a reason why, because it's cheap to trade options, to buy options. It is also relatively cheap to get these outsized returns once in a while. So what you invest as 100 rupees becomes 1,000 rupees. This is not very easy with stocks. Stocks takes time. It takes 5 years, 6 years, 10 years, that kind of thing. But to get this 10x return sometimes on options, it can take 2 hours. And you feel that adrenaline rush and all that stuff. So people gravitate towards options. It's cheaper to do it. It is more gamblingish in nature, and it's more frequent. So you can get things that mature or expire every week rather than only once a month, which is what it was earlier. And you can see even stock options are now 30% of that universe of what clients trade today. It used to be only 17, or sorry, 40 and 30, so 70% together, stock options plus index options. Now it's 61 and 30. And 61 mostly because index options mature every week versus every month for stock options.
Right. And this is like we just looked at share, but if you look at absolute numbers, so index options, there are now 10x, roughly 9x, say 9x people doing index options. Stock options is 5 times. So the sheer volume and the sheer number of people trading this has just exploded. Whereas if you look at index futures, it's just 2x, and stock futures is less than 2x. So the and we saw this in the report that you shared on Twitter last year, where you said the contribution of volumes also from retail has increased. So the absolute numbers are also fascinating, that there are 10x people now doing more index options since
Ah,
2020.
I know, it's big time. And there's one of the reasons for this is also that you see, all these things, games can't be played by institutions. So institutions can't buy and sell options like crazy. You can, individuals can. So it's only FIs, pro, and that is proprietary accounts of brokers and individuals that can play in this market. And the FIs seem to be more in the futures market, the index futures and stock futures markets. Retail seems to be much more in the index options and stock options market. It's just the way the market is.
Right. So after establishing what we are trading mostly in India, next this fascinating chart where we are comparing what instrument and across which age group. And the only thing I have highlighted is that people less than 20 trading index options are making money. So these 20-year-olds are on some social media. We don't know. It's Twitch or Snapchat or where they are getting the right advice. And everybody else is just losing money across the board.
Yeah, it appears like that. You see, the less than 20 are also making fairly significant amounts of money in index options. If you look at the profit makers, they're making 3,82,000 rupees,
Right.
5,37,000 rupees on average. So something is wrong over there, obviously. uh, I don't know that many 20-year-olds that are making, so it's possibly that the data has too few data points of people
Right.
less than trading 20. You have 18 to 20 effectively, because you can't open an account unless you're less,
True.
and you won't obviously. The other thing is, F&O ke liye, our SEBI requires you to produce this income. Oh, I have so much income, that's why I can
Ah,
trade. ये
right.
20-year-old के पास इतना इनकम कहाँ से आया, वो पूछने का. तो ये कोई तो उसका फादर उसके अकाउंट में ट्रेड कर रहा है,
Right.
which has its own layer of problems.
Right.
Or it is just that some broker has not done the checks. Something worth checking. I mean, SEBI provides data, so obviously they must be knowing whatever it is at, and they can figure it out. But that's not the point. The point here is across the board, no matter what you are, your average profits are negative across the board. So whatever you do, whether you do index options, stock futures, stock options, by and large, people lose money. Now, this may not necessarily be true because um, there may be a lot of people simply saying, I will trade stock long and a future short in order to make the arbitrage. तो स्टॉक ऊपर जाता है तो फ्यूचर लूजेस मनी, स्टॉक मेक्स मनी. It doesn't appear in F&O P&L. But the number of people who actually do this are probably very, very few. Or people who write covered calls. I write a covered call, stock goes up, my call loses money, but stock makes money, but stock makes more money than the call loses. Yet, if you look at my P&L in F&O in isolation, you will not see the gain of the cash, which I used as a hedge. Now, these are very optimistic statements for me to make, thinking that people will do both. Uh, Perhaps they do both, but the number of people that do both are, look at the numbers, we're talking 50, 60,000 rupees. Whereas to write a covered call, you're going to need something like 5 to 8 lakh rupees per stock in order to do a covered call in the first place. अगर उतना cash है तो I don't think they fit into the commonplace, streamlined layer of this entire policy, where your average loss is 50,000 rupees. I would say, then those kind of people who do covered calls or just hedges may not necessarily apply. So much as I say that, I think it's true that we just speculate and lose most of this money.
one intuitive question that everybody would get here is that if everybody is losing money across the board, then who is making money? In this chart we have all individual traders. So this data does not include your proprietary trading firms, your institutions, the HFTs, and all those guys are not included here. So probably this is all the crowd getting together and donating their money to
It
the
makes
people who
sense.
know
No,
their
why would
business.
you pay 42% tax as an individual? जब मैं कंपनी क्रिएट करके 25% टैक्स दे सकता हूँ.
Right.
So if I'm serious about this as a business, at one point I'll convert into a private limited company, make it, because it's a trading is a business, make it a business, pay only 25% tax if I'm so profitable. Why would I stay as an individual investor? Only those people who are individual investors who stay in this trade, making small amounts of money, small amounts of investment, not treating it as seriously as a business. And therefore,
Right.
you will always find that people, once they get to a certain size, will probably grow up and create a business, a proprietary business, whose only business is to trade in security. So that also, it's in natural sense. Essentially, our best profit guys are actually moving away, and
Right.
that's where the uh, also, of course, remember, this is trading, so it can make money even if the nifty goes down. It can make money. I mean, the idea of trading is that you're not unidirectional on the market, and you can be in a very shorter time frame. You might be able to keep your risk in the market for a relatively shorter time amount of time. So
Yep. So that's a natural filter then. If you're serious about your trading, if you know your thing, you will be moving out to an institution thing, and so that's why you'll not be in this data. So this is by age, this is by cities. I've put this title that wherever you are, like John Nisham in says that wherever you are, I'll find you and I'll make you lose money. So if you are in tier one, tier two, tier three, whatever city, uh, and everybody at trimmed level or at actual level across the board, no matter in what part of country you are, what kind of information access you have, do you understand English, you don't understand English, which vernacular you have, you are losing money. And that's again an eye opener. The first thing that I saw here was whether tier 1 was losing far more money than tier 3 and the other cities, and the sad part is it isn't. So so that's another
yeah, and it's just that average profit makers in the untrimmed distribution tend to be higher. I don't know if you heard what
right.
I said. Was it audible?
Yeah, yeah, little bit, it broke a little bit. Yeah. Can you please come again?
Yeah, no, no, no. So I was saying that tier one profit makers in general make two
Hmm.
and a half lakh rupees of profit. Second column,
Right.
that those have actually increased. They've started to make 3 lakhs of profits in FY22. But once you trim the distribution, even that advantage seems to go away. So it's
Right.
still the top, 5% that holds the cream of almost all the profits in this industry.
Right. So that's there. And finally, we will talk about, we think that trading is a zero sum game because there's a guy on the other side of the contract. So if you trade with them, either they win or you win. The 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 that's not the case. If you play poker at home with five people, that's a zero sum game because in the end it sums up to zero. But here you're paying charges to the exchange, to the stockbroker, and the biggest chunk to the government. And this is coming out to be so big that you could think that the broker is only 20 rupees per lot and the STT is only 0.125%, and then you'll see exchange is only what, 5 rupees for a crore or 3 rupees for a crore and something like that. And but when you trade a lot, when you trade frequently, and if you just sum up the charges and the taxes that you pay, it comes as high as 52% in FY 2022. So half of uh, whatever you have made in profit or loss is the transaction cost. How big is this? Suddenly
Amazing, no?
futures look, yeah.
Like casinos are the house is winning as much as you are.
Right. And so even casinos has lower odds. This is Even they don't have a 52% odd in this.
Yeah, their take rates are much lower than that. Their take rates happen to be 1 or 2%. So
So
quite
just a tip.
interesting.
So just a tip. I realized this 2 years back when I took out the statement and summed up all the charges that I would incur, and then I realized, okay, boss, I'm only paying charges and not actually making any money. So anybody who's trading and listening in, please every month take a hold of your charges, how much you are spending, and what are the STT and taxes you are paying, because that adds up. Profit or losses also adds up, but these things always go up. Your profit may come down, your losses may get recovered, but taxes and charges are always going up. So I think we have covered this thing in detail, and there's one last thing, Deepak, this correlation. And this is again a very fascinating thing, which is at the end of the report, the last part of the report, where you have to read these sentences carefully, where they say that if you take a correlation means that what is the relation between two data points. If you take a correlation, then you find out that people who are net trading, their net trading PNL is positive, and then their equity FNO is also positive, or their net PNL is negative and portfolio is also negative. This correlation stands at 0.8%.
Essentially, it means that if you're trading both stocks and F&O,
Yep.
and the I take the total profit. If your total profit is positive, possibly your P&L is also positive from a F&O perspective only. But by and large, your P&L is negative. We've seen that 94% are negative, and overall P&L is also negative. That means stocks plus F&O. The P&L, that means zero point 0.8 means it's 80%, 84% kind of correlation.
And why this is so is, if you look at the second sentence, then if you're trading in FNO and if you're trading in cash, in stocks, so if you're making money in FNO, then you're losing money in cash because the correlation is only 0.06. And if you're making money in cash, then you're losing money in FNO. This essentially means, and we have seen that more or less people are losing money in FNO. That means that they made money in cash most of the time when they traded or when they bought something and sold something over the year. But they don't stick to that thing which is making them money in percentage wise, but they go to FNO, which is more exciting, has more leverage. Uh, Again, fascinating. If somebody tells you after an financial year, okay, boss, stop FNO, you are making good in cash segment, continue with cash segment, you are not doing it because you don't get the leverage.
Yep, it's a, you know, Neet, why does this happen? Why do people lose money in F&O? And I think, this is where I think it's really complicated because we funded on de sakte hain ki why and all that stuff. But you see, one of the things that I found in general is people come to the F&O market thinking it's like the cash market except price zara zyada ghumta hai. So, not realizing that the F&O market is leveraged up the wazoo. So, if I buy a stock for, say, I don't know, let's say I have 50,000 rupees that I want to invest. So, how would I invest that money into stocks, right? So, I'll say, okay, I'll choose maybe 20 stocks. Each stock, I'll buy 2,500 rupees worth. Why would I buy 2,500 rupees worth? Because I want to diversify among 20 stocks, right? So, first of all, I diversify among 20 stocks. When you come to trade F&O, you typically say Nifty, Bank Nifty. You have no diversification. So you've automatically reduced one risk factor that you have in stocks, which is diversification, into nothing. You can say Nifty is a combination of 50 instruments, but no. On a trading basis, your losses and gains are on an instrument level. If you're trading only two instruments, you're not diversified. And there are also two instruments closely related to each other. So you lose the risk of diversification, which is fine. If you're trading, you know what you're doing. Second thing that you do in stock market is say कि 2,500 rupees per stock, ज़्यादा से ज़्यादा stock 50% गिरेगा. 50% गिरेगा, I lose 1,250 rupees. I have got 50,000 rupees to start with. 1,250 is roughly 25% of my capital. So 2.5% of my capital. So 2.5% is the risk per trade, in a way. So you're thinking, boss, I have taken a position. Each position can max lose 2.5% at any point in time. So what will happen over time is if I erode my capital, I'll reduce my position size even more. Instead of 2,500 rupees per stock, I'll make it 2,000 rupees per stock. 1,000. So the issue with options and futures is that nobody thinks like this. If you come with 50,000 rupees, you buy 50,000 rupees worth of options. Now, the way the options market works is if you buy some contract worth, say, 20 rupees, 20 rupees into 50, that's the lot size of 50. So you're talking about a 1,000 rupee outlay. You can lose all of this 1,000 rupees. So if you're taking a position in a 50,000 rupee portfolio, which is not diversified, that position should be, let's say, if you take 1,000 to 50 rupees, that's the maximum I want to lose per position. I can't buy an option whose premium is more than 25 rupees, because 25 into 50 is 1,250. And once I buy that, I shouldn't have any other position in place, which is correlated very similarly, right? So I buy a call and a put. In one case I might lose, one case I might gain, but I can't buy a call on the Nifty and another call on the Nifty, which is a different strike price, and another call on the bank Nifty. All of them are giving me the same risk. If the whole thing moves back, I lose in all three of those positions. So I was supposed to have only 2.5% risk. But so people don't think like that. Okay. They will invest like, oh, if I have 25 rupees for a lot size, I won't buy one lot, 25 rupees per Nifty. I won't buy one lot of 50 size. I'll buy 10 lots and invest 12,500 rupees. Not realizing that I'm going to lose all of the 12,500. It's so fast moving as a market. And then you trade on expiry day. On expiry day, the 20 rupees can become zero in less than 5 minutes, or can become 0.1 in less than 5 minutes. And it does. People think that they will do something. They sometimes put stop losses also. So 20 rupees ka 10 rupees ho gaya to nikal jayega. 20 rupees ka 10 rupees stuck mein 2 minute mein aa jayega. Because it's a fast moving market, highly leveraged. So that is, one thing. There's no underlying thought process around position sizing according to your risk. The second big one, and this is huge, is people don't come with enough capital. So the amount of capital that each person has is directly proportional to, say, how much they want to bring to the table is directly proportional to where their earning brackets are. So if you bring in 40 or 50,000 rupees, you cannot play into most option contracts. Because what will happen is you'll end up taking too much risk. Neet, I'm not sure if you're able to hear me, but
yes, very well.
So the funda on this front is simply that you don't, you under capitalize it. I'll tell you another reason why. Because I believe that, let us say you're taking on a position that requires you to build a position over time. So if you bring in, say, 1 lakh rupees, and even if I am buying options, let's say I'm buying options, I want to buy something worth 2,000 rupees today, but I want to build this position for up to 5,000. So first time I'll buy 2,000, next time I'll buy 1,005. So let the position go in your favor, then you buy the next lot. Another more position in your favor, you buy another lot. So a big trend gives you, allows you to deploy a full capital. This is called pyramiding, right? So you pyramid into the position. But that also means that you'll be under allocated for the first trade. You'll have to wait for it to become more profitable. Only then you do set up the next one, and so on. So this pyramiding concept requires more capital. Now, if you want to play, Nifty and stocks, end up with that. So this is another big pain that you have. The last bit is, somebody has answered your question with 100,000 rupees. Now, my funda in this is 100,000 is too less. It should be roughly 10 times that. You shouldn't participate in F&O unless you have 10 lakh rupees. 10 lakh rupees that you can spare, where over time you might lose a big chunk of it because you'll be learning through the process, but you'll be able to bring it back up there. Why do you have this as a problem? Now, one of the problems with this is you can buy options, but you can't sell them. You can buy options because buying options requires just whatever outlay it is. Right. But selling any option requires minimum, I think, 50,000-60,000 rupees of margin. Now, the way you want to do this is you want to be able to both write and buy. Sometimes you'll buy first and then sell. Sometimes you'll write first and then buy back. So this Right first model requires disproportionately larger capital, right? I can do 10,000 rupees में सिर्फ buy, but I need 1 lakh rupees just to be able to buy two contracts. And why would I do only two contracts? I want to base my investment strategy over a period of time where I should be able to get 5 or 6 lots, right? So if I want to do 5 or 6 lots, remember each lot of the Nifty exposes you to 9 lakh rupees worth of risk. Each Nifty is the 18,000, one lot is 50 Nifty, so it's about
Right.
9 lots worth of the risk, 9 lakhs worth of risk. So if you're leveraging yourself 5x, then each lot is 1.8 lakh rupees. The margin that the FNO system requires and the NSE may be only of the order of, oh, I think I might have lost the connection.
Yeah.
Okay, am I here?
No, you're here. Yeah, you're here.
So the idea over here is that if you want a pyramid, you want to build up a pyramiding position, you want to have at least 5 or 6 lots overall. So you might require a significantly higher percentage also. 9 lakh rupees. So 1.8 lakhs is one lot. That means with 9 lakh rupees, you can trade only 5 lots. That 5 lot can be long or short, right? So you have this as an interesting problem. I think if you follow all these things and build yourself a set of disciplined investment rules and just live with a discipline, I think you'll be in the winning category, that 5 or 6%, and that will never change. It will always be 5 or 6%. But
Right.
you will be
But
part of it by having the discipline and the money management and the risk management skills versus anybody else who's basically wanting to treat this as a gambling den. आता है 10 गुना चाहिए 20 गुना चाहिए. I want a story I can tell my friends.
right.
तो
And
स्टोरी है तो
and
दूसरे को, हाँ.
and like Warren Buffett says, nobody likes to get rich slowly. So, and one thing anecdotally I've heard from people who are starting with options, because 91% of the market right now is options. Let's face it, and everybody is doing options. So whenever I come across people who are doing options, and I ask them, "Okay, boss, what's your thought?" So they are like, "I'm buying this option, and if the market goes up, this thing goes up. If the market goes down, this thing goes down." And I'm like, that is also not true. If you buy this option and 1 week hence the market is exactly at the same place, you have still lost money.
Okay,
If
we've seen
market
this now in
right,
TCS results. TCS results, the IV is so high that even you bought the option, you got it right. Market गिरा 6%, आपका ऑप्शन में कुछ नहीं बना.
nahi bana, right? And even if that does, the theta decay does not happen, then there is volatility. Markets
Correct.
start suddenly pricing your options lower, and then also you lose money. So
Correct.
that is a layer that you understand after studying it, after experiencing it, and you should. Yeah, that's a whole learning curve. Like you lose money for 1 year, 2 years. Here, it seems that people come to the market, they get butchered, they leave, then a new set comes, and they get butchered and leave. And so that's a sad part of it, unfortunately. So there's a question here. Uh, we are talking about option buying. So then the question is, people are making money. Like, firstly, there are no people making money. 94% of the people are losing money. So let's never say that people are making money in options. Let me take this make this thing very clear. So many people are not making consistent income. Many people are losing money consistently. But so this is again a very simple way to put something, like selling far OTM options. You could sell an option, but then what is your target? Where is your stop loss? What is your position sizing? How are you picking your strike? How are you picking your instrument? So the whole host of things which Deepak was saying, you should have a strategy. So that's missing when we think about options. It's a whole statistical and psychological game that, that we
No,
have
no.
to.
In fact, I'll tell you what happens is when you consistently make money. Also, the problem with consistently make money is it builds in overconfidence. So what happens is, let us say today, what is far OTM? What is far OTM? Far OTM. People will tell you today, 17,500 is where roughly the Nifty is, right? 17,500, 17,000. 18,000 is far OTM. 18,000 to kal tha. I mean, whatever person. So it is like so close that it could have been achieved in a very small 1 or 2 day move. But it sounds like it's far ATM. Why is it far OTM? Because उसके बाद के ऑप्शन में कुछ प्रीमियम नहीं बचा है.
Right.
मेरे को 1 रुपए का प्रीमियम चाहिए, सो वो 1 रुपए का प्रीमियम और 10 रुपए का प्रीमियम चाहिए. that 10 rupees ka premium is not available in the 18,000 option. So I will do 17,900 and call it far OTM. The problem in thinking far OTM is that what used to be, at one point, I remember there used to be 20 rupee premiums when the index was 4,800 for 5,500 option. Okay, 15% higher. Equivalent today would be 20,000 Nifty ka option trading
Hmm.
at 20 rupees spread. That is huge. There's no way you're going to get that right now. But in 2009 or something like that, it was roughly that time when at 4,800 Nifty, you could get a 5,500 Nifty option for 20 rupees, and that was a good far OTM spread. In 2011, people were writing 100 points away because volatility had collapsed. If you're 5200, you're buying 50, you're selling 5300 and 5100. How easy is it tomorrow to break 1, 2%, 3% move and you're done,
Right.
right?
Right.
So your the problem with this is it will make you money if you get overconfident. Remember, there should be a thing that says, boss, minimum 5%. If I cannot get a 5% uh,
Move.
out of the money option for a reasonable value, then I won't even play this game. To have the discipline to tell yourself that after you have made money for months and months and months altogether, when volatility has collapsed, that there are no premiums, everybody else is playing the same game, to walk away from this game is very, very difficult. And you know what? To come back in when volatility comes back, it'll come back with a bang. It will give you huge premiums, but there will still be a lot of volatility. So you'll have to get in at that point and say, boss, abhi jayega bhi to jayega, but at least I'm getting some premium. And then you do this whole disciplined regular writing OTM kind of call options again. That is when you might be able to win, but even then you'll have periods of losses, and that's okay to do from a perspective of being a market player. uh, Remember here, I think bookworm says this, that maybe bookworm is our new Buffett, which is making boring money is boring. It's so true. This is why you should, maybe look at a computer to execute your trades, because at least a computer will not get bored. Just don't use chat GPT, वो बीच में अपना वो sentence construction में कुछ डाल देगा. But yeah, that's the unfortunate part of trading is, after a while you want it to be boring.
Let me ask you this, Deepak. We are at the end of the segment. Let me ask you this big question. What percentage of options trading? I'll put it as options trading. It's a very complicated thing. There's theta, gamma, vega, all these Greek guys. What percentage of options trading is skill and or knowing how things work or science? So what percentage is science and what percentage is psychology? Where would you put these numbers?
Okay, so one trade, any given one trade is just luck, right? Because you don't know where it's going to go. You make a bet and it kind of works. 10 trades, making profitability is slightly less luck because you've probably survived a bit. You're increased your possibility of this thing. If you make profits after 10 trades, you're probably less lucky than just one trade, but also you've learned a little bit of lessons and all that stuff. Not enough. Over 100 trades, most of the money will be in the discipline. If you're profitable, to be profitable at the end of 100 trades, you're going to need discipline, and you're still going to need a little bit of luck on your side, because things have to work out. But you have to be able to identify what the difference is. Now the behavioral part is in that at 100 times behavior plays a much larger role.
Right.
It's the discipline, your gut lining, kitna loss le sakte ho, uncle point they call it, a point at which you have to go and call your uncle for help. There are
Oh,
lots of
this is new.
philosophies like this, right? So you have these concepts that apply simply because, and trading is like they equate trading to sprinting rather than a marathon. In a sprint, you the sprinters have muscles which marathon runners don't. because they're different muscles that are exercised
Right.
when you sprint.
Right.
So that's why basketball players are muscular, football players not as muscular as basketball players, and so on. So there's a reason for that, is different muscles, and your body thinks or body reacts like a sprinter because their adrenaline bursts up, down, and all that stuff. You can't control these. This is just the natural body reaction to market movements. But you will at some point learn to understand when your body is starting to tell you that something is wrong. If you're getting an adrenaline rush, something is wrong, not right. Because trading, like Bookworm said, should be boring. If it's not boring, there's something wrong. Once you get to that point, is when you're in a zone that allows you to be profitable, because you're focusing on the discipline, not on the individual trades and all that stuff.
And again, circling back to what Anup had written in one of the posts, where he was explaining the quote by Mark Mobusin on skill and luck, where there was this thing which said, I attribute it to Anup because I read it because he said it, he wrote it. When if you can intentionally lose in options trading, that means you have the skill to trade. If you can't intentionally lose, that means you don't have the skill to trade. So we confuse this that acha, I've sold out of money option in FY 21-22 when the market was one side. Keep selling puts and you're golden, or keep selling straddles at 920 and you're golden, and suddenly it hits that it is not working for a patch of time. And so you have that false feeling that I know everything, but actually you control nothing. You just control the cards that are dealt to you in a poker hand, and how you react with that cards is it will decide whether you make money or not, and whether you get up at 11:30 at a house party or you play till 6:30 in the morning. So that's the whole game with, I guess, with options trading also. The same psychology applies here as well. Great, awesome.
Absolutely,
I think
absolutely.
I think we discussed this a lot, and uh, so last question here. Maybe with this we could finish. So Vivek is asking, will SEBI introduce minimum net worth to trade in FNO? Should they?
I don't know. There already is some funda that you should have some minimum net worth and all that stuff.
Yeah.
Nobody cares about it. In America, there is something called pattern day trading, where if you do day trades for over, I don't know, 3 days a week, and if you want to trade with margin, you need to actually either pass an exam or demonstrate that you have $25,000 plus to trade. That means you should have 25,000. That could be another way. They can say, listen, you can't trade unless you have 20 lakh rupees allocated in your trading account. नहीं है तो मत खेलो.
Yep. Basically,
No,
खेलो
so
तो
that,
मत ही. मतलब basically figure out what you're doing.
हाँ, I mean खेलो मतलब वही आजकल वही हो
Yeah.
गया है unfortunately.
Right.
Our TV also goes like that. No, क्या लेना है, क्या खरीदना है. Nobody understands कि boss लोगे तो 40% chance of loss, 50% chance of profit, 10% chance of nothing. All of these things, the nuance is lost. So everybody's into buy or sell. There are no in between. There, buy a little, wait for a little bit time. If it works for your favor, buy a little more. Then if it doesn't work, sell off little. All these nuanced, disciplined strategies, nobody explains to people, right? So in the end, it's like, yeah, this is just what it is. So, here you go. I think we've got a very interesting session done, and thanks Sebi for all this information.
Great. Awesome. So thanks everyone for joining in. So our next session would be on budget day. Deepak, so can we have you on budget day? So that's the Thursday.
Yeah, we'll be here at 4 p.m. on budget day. Hopefully, the budget will be over by 4 p.m.
Yes.
We will look through the documents. We will take questions and answers on the budget only. So if anybody asks me about what stocks and all that, I don't know, but we'll do the budget kind of questions. Today, we're not going to do anything else around whatever else is happening in the market and all that, because market has done its thing. But importantly, you have the budget documents which will come in roughly at 2 o'clock. I'll be live tweeting the budget. We'll come here at 4. We'll have our Twitter spaces in the night for follow-on questions. So it's going to be a fun day, and it's going to probably be our last open live format day, because we're changing the format of what we're doing in video. Coming to you very soon. Hopefully, you'll like the new formats also better.
Great. Awesome. Thanks everyone for joining in, and thanks for Deepak for joining in and taking us through your insights. We'll see you
Bye.
everyone on the budget day. Thank you.
Awesome. Cheers. Enjoy. Remember, it's Wednesday. I think it's Wednesday.
Oh, Wednesday. Okay, so first Feb. Again, that's the day.
20th,
Yep.
29th, 30th,
When
31st, first. Huh. First is a Wednesday. So
Wednesday.
Next
Yep.
Wednesday at 4 p.m.
See you guys.
Stay there.